Cam and I are both retail traders and are here to talk to you about binary options on the Nadex exchange. Now, we're going to tag team this event, and I will start off with some background information on binary options, and then Cam will come in and show you some of the strategies that he uses for trading binary options. So in this presentation, we're going to cover the following points. We're going to talk a bit about binary options. We're going to talk about the Nadex exchange. We're going to talk about how you can get started trading binary options. We're going to share some ideas that we have and others have around trading strategies. And we're also going to point you to some excellent resources that you can access to help you with further information about trading binary options. Now, one of the things I want to point out right off the bat is that trading binary options involves risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, and always remember that past performance is not necessarily indicative of future results. So what are binary options? Well, binary options can be thought of as all or nothing trades, where each trade has a maximum value of $100 per contract traded. This means that the absolute most you could win or lose on any given trade is $100, and probabilities determine the spread between that profit and loss limit. So let's say, for example, that you think that the price of gold is going to close above $1,250 at 1:30 Eastern Standard Time. And let's also presume that traders have determined that there's a 70% chance that this could happen. In this trade selection, you would be risking $70 to make $30 on this high probability trade. Once again, as you got into the trade, you'd know exactly what your risk was and what your profit target would be. And once again, this is a high probability trade. Now, if you felt that gold would be below $1,250 by 1:30 Eastern Standard Time, and traders had determined that there was a 30% chance that this would happen, you would be risking $30 to make $70 on this lower probability trade. So fairly, pretty straightforward in concept here. So here's a little bit about the Nadex exchange. Nadex stands for North American Derivatives Exchange. And if we look at a little bit of history here, it was launched in October 2004, and it was actually called Hedge Street. And it was designed to allow individuals, as opposed to institutions, but individuals to hedge against economic events and extreme price movements in the market. Some of the original investors include the Chicago Board of Options Exchange and Norwest Venture Partners. Now, Hedge Street was acquired by IG Group, which is a UK-based company, in 2007, and they renamed Hedge Street to Nadex. Nadex is based in Chicago and is subject to regulatory oversight by the CFTC, the Commodities Futures Trading Commission. Now, no broker is needed to trade binary options because you're actually going to be trading directly on the exchange as a retail participant. And all member funds are held in segregated bank accounts in the United States. And as a matter of fact, Harris Bank is the segregated bank that holds these funds. There is full transparency on every trade, and it's also important to note that Nadex never takes a position in the market. They are here to facilitate trades between buyers and sellers, and unlike other binary option environments, they'll never be trading against Nadex as an exchange. The other thing that's important to point out is that Nadex is only available and legal for use by citizens of the United States. So you must be a citizen of the United States to become a member of and trade the Nadex exchange. So let's take a quick little look at how do binary options work. Well, everything basically starts with your opinion on the direction a market is headed. So that's the overarching thought there. And there are a lot of markets to choose from. It's very diverse here. You've got the opportunity to select Forex pairs, for example. There's stock indexes that you can choose from, and commodities. That you do is you select the asset that you want to trade. For example, if you're looking at Forex pairs, you might select the Euro USD or the British Pound USD. If you're looking to trade stock indexes, you might select the US 500, which is analogous to the S&P 500, or the Wall Street 30, which is identical to the Dow. On the commodity side, you might elect to trade gold or crude, but there are a lot of options that you have for assets to trade within multiple markets that are available to you. So a fair amount of diversity there. Next thing that you need to do is you need to select a strike expiration time frame. In other words, are you going to be looking for an expiration that's on an hourly basis within the day? Are you looking for something at the end of the day, or are you looking for a weekly expiration time frame? And then you need to determine if you want to buy or sell. And once you do that, you select the number of contracts that you want to trade. You decide what price you're willing to pay for your option, and then you place your order directly on the exchange. You also have the ability to close your position early if you want to, let's say, for example, limit a loss that you felt sure might happen, or if you just want to lock in profits because you were nervous as to whether or not your options were going to expire into the money. So you always have the possibility of getting out of your position early. And how much does it cost to trade binary options? Well, you can open up a 2-week demo account for free. So there's no charge to open up a demo account. And as you've heard from multiple traders today, it's important that before you risk any capital that you first practice and get some testing experience under your belt. It also costs you nothing to open up a full account. There are no platform fees associated with trading binary options, and there are no account fees. And you can open up a live account for as little as $100. Now, the commissions are 90 cents per contract, but what's interesting, that maximum commission is limited to $9 for multiple contracts. So, for example, if you were trading 20 contracts, your maximum commission cost would be $9. If you were trading 15 contracts, your maximum commission would be $9. And folks, that is per side. So the round trip cost, for example, per contract is $1.80, and the maximum commission would be capped at $18. And if a contract expires out of the money, you are not going to be charged a settlement fee. So just to give you a little bit of a quick summary on this background, binary options are based on a simple yes or no proposition. You either believe the market's going to close up or close down at a position in the future and at a specific time. It offers an intuitive way to trade the financial markets. And some other hallmarks are this: your limited trade risk, which means you always know what your risk reward is before you place your trade. You've also got some nice flat market opportunities because you could benefit from volatility in the binary options markets when the underlying markets are actually pretty quiet. You also have the advantage of short-term expirations, which might allow you to take advantage of fast market moves with a short-term expiration. And you also have something that's called spike protection, which means you can trade with confidence without fear of being stopped out. I know, for example, the bulk of my trading is in the futures markets, and one of the things that we as futures traders are concerned about are sudden moves that are actually going to take our stops out. Well, when you're trading Nadex binary options, if you have a big move against you, it's immaterial, because what's important is where is the price at the point in time that the option expires. So this is some background on the Nadex. I think many of you have probably heard much of this information, but I thought that I would start by laying some foundation. And now I'm just going to go ahead and hand the headset and the microphone over to my brother Cam, and he's going to share with you a bit more about how he takes a look and trades the binary options markets.
All right, thanks, Raul. And so I've been trading Nadex for a while, and I've been focusing on on binary options. There are some other ways to trade Nadex that are spread options. I haven't gotten into that. But the key to Nadex, in my view, is to be able to research directional strategies that can give you much greater confidence on which direction a market is going. So I've been with TradingPub for several months now, and I've sat in a bunch of webinars. And what's interesting about these Trade-A-Thons and several of the other webinars that TradingPub hosts is that I get the opportunity to listen to a lot of people speaking to various markets, whether it's Forex, whether it's futures, options, and many of the strategies that I've sat in on, and in some cases transcribed, have had some really strong binary propositions. As they are counting pips in a Forex strategy, what I'm seeing is, my gosh, this is a great binary proposition. And one of those was actually something that I learned from Josh Martinez, and he's with Market Traders, is it Market Traders Institute? And he did a Forex presentation back in July. This is the TradingPub website, and there's a lot of education on there. But if you take a look at their free education thing in the July thing, you'll see the recap of one of our Trade-A-Thons. And he did something called the London Breakout Strategy for Forex trading. Are there any Forex traders here? Just type in yes if you trade Forex. Well, if you trade Forex or you're considering, this is a brilliant strategy for really, basically he has a proposition that can pretty much reliably pick you up about 50 pips or $500 a day. As I was listening to his presentation, though, it had a really strong binary component to it. And anyway, this is the London Open strategy, and it's based on this presentation that I saw from Josh Martinez. Since then, I've seen several variations of this strategy. And it's a great strategy if you have a working job during the daytime. You don't have time to trade during normal trading hours. This is a decision you can make very early in the morning, and you can just let it run all day. You can go to sleep on it. And it's very simple, and it's based on a very simple rule. And that's that the daily low or the daily high will be established between 2 o'clock in the morning to 5 o'clock in the morning Eastern Daylight Time. That's when the London market opens. And what happens at that point in time, at 3 o'clock in the morning Eastern Daylight Time, there's a 1 hour overlap between the opening of the Bank of England, the London market, and the Tokyo Exchange. And there's a tremendous amount of transactions that are being cleared through a relatively narrow time window, which spikes volatility in that currency pair, the British pound against many of its currency pairs. I just have chose to focus on the dollar. And what you will see more often than not is a strong directional move, either bullish or bearish, and I don't care. I just want to see that thing moving. The opposite daily high or low is going to occur between 8 a.m. and 2 p.m. Eastern Daylight Time, which coincides with the opening of the New York Exchange. And and it happens like clockwork, and I'm going to show you a couple of examples. But basically, I've been following this strategy using Nadex, and almost every morning, with the exception of the last week where the Scottish independence referendum has come into play, this thing has worked like clockwork. Honestly, this past week, the pairing of the pound and the dollar has been like blowing up a balloon and let it fly across a room. It's going all over the place, and it's breaking a lot of rules. But it's a short-term a very short-term strategy, short-term issue. So here you basically, oops, let me go back. Here you see the basically a chart of the Forex markets. You can see that the Tokyo market on the bottom overlaps with the London market at 3 o'clock, and that's where you see all of that activity happening. And then between 2 and 5, the lower the high is going to expose itself. A couple hours will transpire, and then the New York market kicks in, and then the opposite lower high happens. And basically, here's a slide of this was I believe it was July 17th, and here was a slide of a typical day. The European market opens at 2 o'clock, right here where this arrow is here on the left. At 3 o'clock, the London market opens, and it kind of chops down a little bit, but then there's a move straight up to a point before 5 o'clock. And I took a look at that. We're kind of choppy here. We established a high point, and I said, there it is. Keep an eye on that point. I followed it a couple more bars, and boom, the bottom fell out, and I said, okay, the high is right there. And on Nadex, typically your strike prices are in 20 pip intervals. So I looked at the closest interval to come into, and I found that if I bought in around the 1714 area, I could get about a 60-40 proposition. That means I was risking, I was selling this for $40, picking up $40, risking 60. And so I put in my order, and then I was done. And then from the end of the day, just sort of during the after 5 o'clock, it just sort of worked its way down. At 8 o'clock in the morning, here's where the New York market opened, and boom, it shoots back down, and it finished off at a session low. And you see this almost every day, either up or down. So, I mean, it doesn't happen all the time, but it happens enough so that if you recognize a clear high or a clear low happening between 2 and 5 in the morning, there's a very good chance that the corresponding low or high is going to happen between 8 and 2 o'clock. So the rules that I set up for this is that I choose a strike price where I'm sort of moving along with the trend. I'm usually about 20 pips into it. I find something between 60 to 40, 50-50, somewhere in around there. If it works within my risk-reward profile, and I like it, you know, I'll pick up a contract or two, and then I set my expiration for 3 o'clock, which is one of the expiration targets for Nadex, and which is sort of like the end of the day target, and just let it ride. I only risk capital that I'm comfortable losing, but having such a strong probability riding on my side, I'm running some very, very strong results with using this particular strategy and Nadex. So to get my information to make decisions on the British pound strategy, the first place I go to is investing.com. And in investing.com, a couple of things can happen. I've got a chart that I can explode up, and this is basically the movement of the pound. In this particular case, this shows where the previous day close was. And I like the pound because investing.com, because the first thing I go to is on this site is oops, there we go. I'm going to take a look at the economic calendar. I want to see if there's any news happening in come on. That's interesting. It's kind of, oh, here we go. So I want to take a look at what's happening on the other side of the pond in the morning. And at 4:30 this morning, there were several reports coming out. Some of them were neutral. Some of them were bearish. Under normal circumstances, that might have a bearish impact on the pound-dollar pairing. I also want to see what's happening later on in the morning on the U.S. side. And if those, I want to see how the reports are going. And that gives me some information because I'm not sure that I want to pull the trigger on anything ahead of the news, especially if it's a significant report, or if Carney is speaking on the state of the pound. You know, I want to stay out of the markets until the markets react. So I use investing.com to make some decisions, gather information about the markets, and you know, I pop a couple indicators on the charts and take a look at the where it is, take a look at where this currency pairing has been on a daily basis, and you can see that there's a clear the past month on the pound dollar has been almost straight down. A lot of them have had very violent moves bearish. So there were a lot of opportunities where I would come in and sell right about here in the morning, and by 3 o'clock in the afternoon, I was well good. I didn't have to worry about it. And then if you went back to on a weekly basis, you know, you could see that there's been a long history of that pairing rising. It's only been in the past month or so, past couple of months, where it's actually come down. And we're going to see what's going to happen after the referendum, after the votes come in. If it's a no vote, this thing could tank. If it's a yes vote, if it's a yes vote, this could tank. If it's a no vote, it could shoot right back up. Personally, with the pound dollar, this past week, I've stayed out of it because things are kind of crazy. But so I just wanted to kind of let you know, with this particular strategy, I like it because going back to the rules, it's really the biggest thing to take away from this whole thing is between 2 and 5 in the morning, you're going to have the lower the high of the day established in the pound and many of its pairings, actually, the yen and everything else. I just use the dollar. And between 8 and 2, you're going to see the corresponding lower high happen. And if you can't see it, you know, then that becomes gambling or flipping a coin up in the air. Sometimes if I can't see the pattern is too choppy, I might wait before around 5 o'clock. I might wait till 8 o'clock and see what happens on the other side of the pond. But even then, more often than not, I'll just skip the strategy. There are way too many days out of the month where this formula works. So let's go over to the Nadex platform. And here I have the little pound strategy, the British pound strategy. And this morning, it's with the previous close of the day had been 162.766. So this is at 3 o'clock in the morning. This is when the Bank of England opened, and look what happened for the rest of the day. It went straight up, and it actually never did anything choppy. So this morning, I took a look at this and said, well, I'm not going to trade live because I don't trust what's going on with this referendum thing. But I did place a trade in my demo account just because I had to do it. And what I chose was the average daily range for the pound over the summer has been about 100 pips. As it's moving up in this, as it was moving up in this direction, I chose a strike price about 20 pips up at the 1320 level, and I got on that one a 60-40 proposition, risking $60 to make 40, and I was okay with that. I felt pretty good about this whole thing. But once I made that trade and locked it in, it just kept on going. I didn't even have to think about it. It kept on moving up, and there at 3 o'clock, that's where it closed, and I was good all day long. A little bit later, I was watching. This is, by the way, this little indicator right here is the 8 exponential moving average, and one of our speakers, Stephen Bigelow, uses this a lot in candlestick patterns, and I just like the way the charts line up with the EMA. And he uses that and a stochastic indicator to show overbought and oversold conditions. And why don't I just pop that in? This is the Nadex platform. They give you all kinds of indicators, so I'll pop in the stochastics. And he likes using a 1233 stochastic oscillator. Anyway, right around this time, I was thinking I got a presentation tonight. Let's just see what's going on here. And we were kind of, we weren't quite totally oversold yet, but we were coming up. The stochastic was moving back up, and basically his feeling is, or what he teaches is that if the candle bodies stay above the T line, you know, you are riding an uptrend. If they're below the T line, you're riding a downtrend. And right around this point, we were starting to cross back over. The indicator was confirming, and everything was starting to move its way up. And it started moving up this way. So I got to thinking, well, let's do another little trade here. And as it was moving here, I found a decent proposition right at this 164.20 mark, and I basically set that for 3 o'clock in the morning. That's actually a live trade right now. So if I go into open positions in my demo account, you can see that I'm right around $50 to the good on 3 contracts. If this thing, when this thing expires at 3 o'clock in the morning, I can choose to take, I'll pick up about $120 almost. Or if I just didn't feel like going to sleep on this and I was happy with $45, I could close this thing out right now. So this is one really good directional strategy, and I'm sure that many of you have all kinds of indicators or strategies that you use that are directional. If you see something that really screams a strong directional proposition, I would argue that it might be a good binary proposition. And going back to what Rollie was talking about earlier, what I don't have to worry in this whole scenario is getting stopped out. I'm dealing with a defined period of time, and I'm basically making an educated guess based upon some rules and a particular strategy that's been proven over time, that if I can see what I think is the low of the day, then the corresponding high is going to show up several hours later. And the good thing about this was I tested it. I got a Nadex demo account, and I tested this thing, and it worked, and it worked, and it worked, and I finally felt comfortable going live in it. And by the way, the demo account lasts for 2 weeks. They give you $25,000 in play money with a Nadex demo account. You can fund it with $100, and once you fund one trade, you have unlimited access to the demo platform. So you can continue to test strategies on this particular platform. So going back to our presentation, so that's a little bit about the London Open strategy, and there are other strategies that I use that I've talked about a little bit. And this is basically, this is a lesson that goes much deeper, but Stephen Bigelow talks about all kinds of things with candlesticks and various candlestick patterns, and how to basically take a look at how you can use candlestick analysis to sort of get a gauge on investor sentiment. But I also use what he's indicators. He basically keeps things extremely simple. It helps me make some binary decisions. And as I showed back in over here, that the stochastic oscillator he has set at 1233. You've got the 8 exponential moving average is a T-line. And he basically said if he were on a deserted island and he had one indicator, it would be the T-line. The oscillator is sort of a confirming indicator that he uses. And going back to the Nadex platform, if you can see something riding over a period of time, whether it's on a 15-minute chart or a daily chart, or you see this thing happening over time, you're going to see a downtrend, crosses over, rides above the line, six are in line with it, showing that you're going from oversold up to going back into overbought condition. You can get a sense on where the market is moving. Here we are on an hourly for today, and it's just shows you a really nice ride for what's happening with the pound dollar, which let's see, I see a comment from Steve that currently it's strongly a no, so it looks like Scotland might continue to be reunited with England. Mike asked what the time frame I use for the FX approach. It's basically a daily approach. So my expiration is I'll make the decision usually by around 5 o'clock. I want to see how the 2 o'clock and 5 o'clock in the morning window shakes out. And once the high or low has clearly established itself in my view, then I'll make a decision whether to where my strike price is going to be, what my risk reward proposition is going to be, and my expiration on the contract is always the 3 o'clock expiration point. So you see over here on the Nadex platform, you have there are a number of with a pound dollar. Let me just shrink this up here. There were a number of propositions at the 3 a.m. That's where I took one of my trades. But you can see there was a 10 p.m. that's Eastern time. It's already expired. There's 11 p.m., 3 a.m., 7 a.m., 11 a.m., 3 p.m. That's the one I go for, and it's basically in concert with the rules. I mean, if the opening is going to establish itself between 2 and 5, and the close establishes itself within the close establishes itself between 8 and 2, then I'm going to set my expiration at I'm going to set my expiration at 3 o'clock. So these are really the two biggest the two biggest strategies that I've been using thus far with it. There are a couple of other strategies that I've been testing for within intraday. Rollie uses has some information on gap strategies, and he has basically percentages on when certain indices are going to, or commodities, what the probabilities of them of gapping back to their previous close are. And if I find that there's a fairly high percentage that an index S&P 500 is going to gap up or back or gap down, I might make a decision on that index for 11 o'clock in the morning to move in the direction of the gap down. I just don't have enough information on that right now. I've got a question here about the time frame on the charts. I've been showing things like typically I work on a I like to work on a 5-minute chart. I'm just the most comfortable with that because it's more where I've had my pulse of things. I've also worked it on a 15-minute chart, and it doesn't seem to bother me too much. Since I'm not working right now within since I'm not trading within really short windows, and really knowing that my decision is based upon identifying a low and a corresponding high in the London breakout strategy, it really is sort of irrelevant. All I really need to do is find a low, and if I don't see it, it's not my day to trade that particular strategy. Any questions? So the question for what is my time of entry to begin the daily contract? Using the pound, using the London breakout strategy, the answer is it depends. It depends on a couple of things. First of all, I'm going to take a look at the economic news over on the British side, which typically come around 4:30 in the morning East Coast time. So if there's a lot of economic news coming out, I might wait till around 5 o'clock, and that's just fine, or 5 or 6. See how the market digests that information, because I don't want to trade in advance of the news. And if I see the high or the low, and it's not obscured by the news, and everything's moving fine. Over the past month, for example, the pound has just been beaten up by just loud, substandard economic news, and every time a report would come out, it was usually bearish, and the pound just took, it just took a beating against the dollar. Let me just pull up the dailies on that. I mean, there was a lot of bad economic news on the British side of the pond, and then our economic news is pretty strong, jobs and housing and everything else, and whenever the FOMC would say something, it just further strengthened the dollar against the pound. So, it really bled out of a lot of energy down to here, and this little area here on the bottom of the chart, let me just blow this up a little bit. This little area on the bottom of the chart basically goes into the last week where there's been a lot of wishy-washiness going into the referendum. So really, I follow the economic news to get into this. The question is the pound dollar the only pair I trade on the London strategy? Yeah, Mike, mostly, but it works with the other pairings as well. I've toyed around with it with the pound yen, and that seems to work just really fine. Nadex has got only a few options for the pound pairing, so I mean I've got the ability to trade a couple of pound pairings, but let's see. I got the pound dollar, I got the pound yen, and you could go the euro pound. So you have 3 different pounds. At this point in time, I'm just really comfortable working with the dollar pound pairing, and sometimes I've been following it almost every day, and when you do that over and over and over again, you get a sense, you almost have a feeling like you have a pulse of the market. So I'm kind of in my comfort zone with that. I need to move out and play with a couple other currency pairs, but right now it's until that horse kicks me, I'm having fun with it. Any other questions? Okay, so Joel says, can you please repeat the strategy rules? It really couldn't be simpler. You take a look at between 2 o'clock East Coast time and 5 o'clock East Coast time, the daily low or the daily high will reveal itself with the British pound versus the dollar. And the corresponding low or high will be between 8 o'clock and 3 o'clock. Excuse me, 8 o'clock and 2 o'clock. Those were the rules that Joshua Martinez talked about in his Forex trading strategy, which is a great presentation. And I'm going to go back. If you go to, by the way, if you haven't been traveling around the TradingPub website at all, I highly recommend that you do, because there's a lot of really good information up there. But this was in our July. If you go under almost any one of the things, futures, options, Nadex, you'll see the recap of the July Trade-A-Thon, and you'll see Joshua Martinez's presentation on the London breakout strategy for Forex trading. That's basically, I mean, I went through that thing. It was so well done, and literally I went, oh my, binary, this is a binary proposition just waiting to happen. I mean, it was fun. I was looking at this and said, oh my gosh, all I have to do is know between 2 and 5 when the lower high is, and the corresponding lower high will be out a few hours later. I mean, that's in his presentation, it was, you know, entry, exit, stop loss, count X many pips, and you can make $500 a day, and that's wonderful for Forex trading. On the Nadex side, all I saw was a simple yes or no proposition, a very, very strong, high probability binary proposition. And for me, it works within the Nadex trading platform. Okay, and there's also a lot of education that's built into the. And this is actually a newsletter that I put out through TradingPub, but it's called the Probability Report, and it's basically a little Nadex newsletter. But in there, Nadex puts out every Monday and every Thursday they put out a free webinar. So the Probability Report, I don't know if Yana, you can get that and put up the link to that. This is the September lineup of webinars that are hosted by Nadex. And then I sort of scour around and find news on, here's a Forex strategy, it's a webinar. I find blog articles about it. And I put that out once a month. So there's some additional resources available to you on Nadex. And Jack, your question was, I don't understand how you, or is it earn? I'm not sure what that question is, but basically with Nadex, you're dealing, every contract is in an increment of $100. So if you're risking, you can risk $70 to make $30. You can risk $30 to make $70. Basically, your risk reward is good. Your contract is between a buyer and a seller. It's very much an auction process. Nadex is just an exchange that matches buyers and sellers. So, you know, if I think that there is a 40%, if I want to risk $40 to make $60, there's somebody on the other end of that contract that's willing to risk 60 to make 40, and Nadex just matches us up. Okay. Well, I'll tell you what, I'm going to hand this back over to Rollie if there are no more questions.
Thanks, Cam. Good job there, bro. Sharing what you've been able to glean so far about trading binary options, and I know that you're having an awful lot of fun doing that, and there's even more here to learn. The key thing is this, is that I think that, and we're both in a period of discovery here because Nadex has just been introduced to us, and as I mentioned earlier, I am primarily a day trader of the futures markets. And so when I think about a binary option being a simple yes-no proposition based on what you think the market's going to do, well, I mean, for me, I want to have some meat behind that. I want to have something. I want to have an indicator. I want something predictive that's going to help me, you know, have a positive sense as to what the market is going to do as opposed to just a guess. And so the London breakout strategy that Campbell just shared with you is an excellent way to do that. The strategy that he shared with you that's developed by Steve Bigelow for spotting trends in the market is another way to do that. I'm spending a lot of time right now looking at opening gaps because I believe that you know, that there are percentages that you can get as to what a gap, whether a gap is going to fill or not across a variety of markets. And a gap fill, for example, and a strong probability on a gap fill could be a great indicator or a way to go ahead and take a look at trading options. And these are things that binary options, and these are things that you know, as we get more experience, uncover these things, you're going to find that we're going to come back here at these Trade-A-Thons and we'll share these new ideas with you, because once again, I think at the end of the day, we need a little bit more than an opinion opinion as to what's going to happen in the market or a guess. We'd like to have something fundamental that helps us in our belief structure. So, well, with that, folks, we want to thank you so much for attending this presentation. More importantly, for attending the September edition of the TradingPub Trade-A-Thon. I'd like to thank each and every one of our presenters for the time they took to prepare and deliver their presentations. I think they all did a fantastic job, and I'd like to think that we met our commitment of creating an environment where each and every one of you should have walked away with at least 3 new ideas